Most of the focus we've had has to do with the United States and the United States economy. And as you can tell, there are a number of uncertainties that make it difficult to predict exactly what's going to happen within the United States. And that is one reason why in a country in East Asia, an island called Japan, we, for a considerable period of time, have felt that interest rates in Japan are going to be going up. And a big part of that is that it matters much less what United States policy is and matters much more to what Japanese policy is on what happens to interest rates in Japan. The main reason that I'm so intrigued with interest rates going up in Japan is because they remain incredibly low. Now, for the 10-year government bond called the JGB, a few years ago, they were at less than, I think they might have gotten as low as a half of 1%. Currently, they've moved up a lot percentage-wise from that. The last number I've seen are like 1.3, 1.4% interest, but that still is extremely low. Extremely low compared to what? Glad you asked. Extremely low compared to current inflation in Japan. No longer is the Japanese economy have their prices are not going all up at all, having deflation. Now, the inflation rate in Japan has moved up to 3% or more, and beyond that, you have a situation where the labor force in Japan, which is customarily very supportive of government policy and was used to having when they went shopping with their yen from their salaries, used to being in a situation, well, the price of rice is about what it was a year ago, or the price of rent, et cetera, et cetera. No more. In the last couple of years, inflation in Japan has surged, and the labor force, not being stupid, has noticed. In Japan, the most important trigger to what happens to wage inflation is the union, I believe it's a central union in Japan that negotiates with the employers. Would you like to know what their negotiation came up with percentage-wise? I believe the number is 5.49%. Wages will be increasing in Japan. That is one of the reasons why, even though the central bank has recently raised their interest rates from the basement levels that I mentioned, the central bank is also indicating that there will probably be more rate increases. How can that fail to cause the prices of the 10-year JGB to go down in order to have their interest rate go up? And this is obviously what our hope is. I should finally say that unlike the stock market, as I frequently say, if you want to get into commodity like a 30-year, like a JGB going short, be sure to protect yourself by using stops. So let's, for example, say that the index of the 10-year JGB is currently at a 141, and you have a situation where, for example, you had one of those contracts so that you would lose about 700 US dollars if it went up from 141 to 142. So therefore, if your account with your commodity broker is, say, $5,000 and you have one of those contracts, now your account is worth 4,300, and so you should have a buy stop. Maybe it's at 43 or something of that nature. And almost all the horror stories you hear about being trading in commodities and getting in trouble is because people did not have those stops. So I would recommend to those of you that are considering shorting the JGB, which any commodity broker can set up for you, don't forget to put in the stop.